and highlighting while digital Wildcatters is leading the frontier of technological innovation in oil and gas, AI, software, is the fact it took us an hour and 15 minutes to get online to record this.
And despite the fact that Colossus is located where I am, we can't find good Wi-Fi.
Yeah, one of the largest facilities in the planet now, and you're right next to it, and bandwidth sucks.
35 gas turbines. None of them with permits.
Yeah, it's all that air pollution.
Yeah. That would be Memphis, Tennessee to take the ambiguity out of it.
So, Kirk, give us the lowdown. You're leaving us to go to the Northeast. What's the story?
Man, I mean, this is like an empty nester dream, but we have our daughter's graduating in a couple weeks. We're heading to Nantucket for the rest of the year, so we're excited.
Nice. That's awesome. We will definitely miss you. But we hadn't seen you in the studio in a while, so I'm not sure. Not sure that'll change.
Yeah, I like working remote. You know, I was remote even before it was cool. Before COVID, when I was working at a small company in Round Rock, I learned early on that there's two things. You either have to be in the office all the time to look like you're doing good work, or you're in the office none of the time to look like you're super busy. And I took that route. So I was never ever in my cubicle. And even Michael Dell had his own cubicle, by the way. But I just took the path of never being ever in your office, because then everyone thought I was busy. And it's true, I was busy. But so I love being remote, guys.
Very, very cool. My deal when I was at Kane was I had to walk out of the office at 6:30 every day, because at 6:31, people just became crazy. Like, people would walk into my office and go, well, his office is like 2 square feet bigger than mine. I was like, did you measure? How do you know that? I mean, that's crazy. So anyway, I kind of get it. All right, where are we kicking off? Shale BP? Kirk?
Yeah, let's kick off there. But before we get started, I want to give a shout out to the Rhodes College Lynx baseball team, who came from 3rd seed in the conference tournament and took the title and are now in the NCAA regional round. So,
dude, fantastic, man!
Lots of road time.
The single greatest sporting event, I think, is the College World Series. Heading up to Omaha, 8 teams in it, college. It's kids. You know, the wild thing about college baseball is, generally speaking, it's middle-class families up there, because if you're really poor, you go to the minor leagues and play baseball so that you can get paid. There aren't a lot of scholarships for college baseball, so you have to have some wherewithal to be able to pay for college. And, you know, the middle class of America is just what makes everything great. So you go to Omaha, everybody's pleasant, everybody, you know, somebody you don't even know is sitting next to you, and you're like, hey, I'm going to go to the concession stand, need a hot dog. Oh, absolutely. You know, it's just great.
Well, in full disclosure, we're talking Division III. So that College World Series is in East Lake, Ohio.
Still, I'm sure.
Don't even know where it is. Sorry. But let's go back to get to college. I mean, unlike back when we were kids, we had cleats, our glove, and maybe a bat or two. Today, kids play select baseball. They have 17 uniforms. They've got 47 baseball bats. They probably have more than one glove, which is crazy. They have multiple hitting gloves. And then they travel.
3 hitting instructors, 2 fielding instructors, a pitching coach.
I mean, I know a pitching coach. He won the world championship in long driving, Sean Johnson, and his day job is actually teaching kids how to throw heaters. I guess how to pitch in general. And if you're not throwing 96, you're nothing, supposedly, right, to get into the majors. even though that's not really true, but like it keeps every year. It's like if you're not throwing 108, you don't even consider yourself eligible. I'm like every year it goes up.
Depends from which side. Left-handers get a little velo leeway, but yeah, you're generally right. The by level, our starter on Friday was sitting 93, 94 late in a complete game. So,
dang.
Yeah, it's and with the scholarship limitations and rule changes at D1, you're going to see a cascade down of even more talent in Division II, Division III, and AIA, et cetera. So there's good baseball at all levels.
Because the academics that study sports say the hardest thing to do is to play quarterback, read the rush, make the right throw and all that. I still don't believe that. I still think the hardest thing in sports is to hit a curveball because I don't know how anybody does
That's what washed me out. I would say that, I think in all of us, we've considered those of us that didn't make it in sports. Well, I mean, I guess you could say golf. But going trans to try to play softball, I'm not sure that, hitting those off those girls that throw those softballs is crazy. I don't know if you see how fast they throw. They're shorter. They're not even, I don't know how much shorter they are to the home plate, but those things are zooming. I know they're bigger than balls, but still, I'm like, man, that'd be hard to hit.
78 is equivalent to like 98 to 99.
It's crazy, dude. That's phenomenal.
Yeah, exactly. All right, man, kick us off. Shale BP, is that happening?
Dude, I haven't gone into the deep caves here, but I did sit down with a Shell executive last week while they were in Houston for OTC. And here's sort of here's the rumblings that I'm hearing. I love YL. I've told you that, but he is taking an axe to everything. So I think the internal consensus is people are not super happy with him because he's just cutting. And he's, and this is what you hear when any company's trying to actually make money, you hear the same rumors, like all they care about is the current shareholders and the current quarter. But like, I think Shell needs to trim fat. But let's talk about BP for a minute. Inside of all these majors, you've got the consultants that always have these decks, the investment bankers, probably the management consultants that say, hey, we need to go buy somebody. And that's always an option when you have nothing to do, when you don't know where to put your cash. And it could be a great accretive event. But BG was one of those investments that's been pitched in front of the management team every few quarters. The BG merger came up and eventually they pulled the trigger. I think when you're looking at the moves by BP and Shell, I think Shell's putting themselves in a much better position by axing things that don't make sense so that they can preserve cash to go make a huge acquisition. What do you think, Mark? Have you dug into some of the analytics?
It just sparked my attention over the last week, and there was, maybe it was certainly didn't have a slow Friday going into this weekend relative to everything that's going on with trade negotiations, et cetera. But, BP Shell has been around for quite a while. I went and looked, I forget where I saw it, but you look at the comparative head counts across all the majors, the Euro majors, US majors, and Exxon, I think, in the last 5 years, went from 75-ish to 61,000. Shell's still kind of hanging around. It had a little bit of a dip, but it's come up to close to 100,000. And BP is, I believe, pretty much held in there at maybe 75 to 80,000. BP is a shell, pun intended, of its former self. It's a $75 million, well, maybe up a little bit more today, $75 million market cap. And so the other part of this.
Billion. You said billion, not million, I hope.
Yeah, 75 billion.
Okay.
Yeah, hopefully not on its way to 75 million. I do think that, a Euro combination makes a hell of a lot more sense than, conjecturing as to whether Exxon or Chevron would be possible suitors. But, at the same time, how does this, from a strategic standpoint, how does this kind of a mess of a situation with BP, how does that help the near and midterm for what Lyle's trying to accomplish, which I think is, has been the right approach?
I mean, I think the question is, there's a few interesting comments that I have. One is what does BP offer them that they don't have? It's got to be assets. It's got to be access to territories or to fields or to something strategic that Shell doesn't have on its own. That's interesting. The second piece is, well, we all know Shell's headed to the U.S. We know that. So is this a strategy to take all the euros off the table and move? Because I'm thinking Shell not only is going to move to the U.S., but I'm actually saying they're going to throw a curveball and move to Dallas just to fuck with everybody in Houston. That would be hilarious, by the way. So I'm wondering what strategically does Shell have to gain with the BP acquisition?
Yeah, because one of the thoughts I had along the lines of what you're saying is, so much of Shell and BP are both trading operations.
Yeah.
And I'm not a trader, so I don't know if 1 + 1 = 3 or if 1 + 1 = 1.25 on trading stuff. But who's trying to build a trading presence these days? And from what I hear, kind of had some fits and starts on it. Exxon.
Exxon, absolutely.
Does this put Exxon into the trading business? Although
BP is number one in the United States in gas, and Shell's number three, maybe at this point. Maybe they're number two, but I think that would be. I mean, will regulators even allow a merger like that to go through on the U.S. trading side?
Lena's gone. Bye, Lena.
But I think ultimately, what does that do to your multiple?
Well, it hurts. Trading operations always hurt your multiple anyway, because it's sort of that black box that doesn't really get reported separately. It puts a lot of cash, a lot of risk on the table, and it's risky because it's short term. I think it makes a lot of people uncomfortable. No wonder Exxon hasn't pulled the triggers, because what does it buy Exxon? A lot of risk, and Exxon's the opposite of wanting risk. I don't see that being super successful, actually, but I could be wrong. Culturally,
I've heard, at the end of the day, you got to pay traders a lot of money, and that just doesn't fit with kind of the Exxon culture of you get paid well, but you advance through the years, and ultimately we want you retiring with a lot of stock and living off your dividends.
I also think European labor laws are going to make it really tough for a U.S. player to come in and do the type of rationalization that, the combinations that we've seen here in the U.S. have resulted in. So that's a sticky wicket. And I also think, from Chevron's perspective, they're certainly laser focused on getting through this arbitration as it relates to Hess. And, if I got a chance as Exxon to pick up a big chunk of that value by consolidating position in Guyana, that's probably tens of billions better spent than on BP.
All right. I'll throw one other thing out there when we were emailing about this story. One other thought. Does BP go the opposite direction? Do they buy somebody to, in effect, kind of help say we truly are focusing on hydrocarbons again? And if they're going to buy somebody, who are they going to buy? I'm going to throw it out here just so I've kind of staked a claim for this. 10%, maybe 15% chance BP buys Apache. No, I'm serious. Think about it. You've got
a lot of legacy BP at Apache, by the way.
Exactly.
Employee and leadership wise.
Yeah, well, and asset wise, that's basically what Apache did, was they put together the old BP Permian assets to some degree.
Plus North Sea.
Yeah.
Yeah. Well, back to the kind of generic question. I'm not going to speculate on targets. I think from a cost of capital and the very difficult, if not impossible, scenario in which they could do an accretive, significant deal, just given where their equity trades, because they're going to have to use equity for a significant chunk in such a scenario. They've got a significant disadvantage as a buyer that I don't think, their activist Elliott is going to be very kind to. And kind of what we saw coming out of the investor day, we're pivoting, we're going to shift a whole bunch away from renewables into oil and gas again. I don't think that was a significant enough of an urgent change that someone like Elliott might be looking for.
Yeah. This was interesting. UBS, their research team, put out a note talking about Shell possibly buying BP, and one of the big factors in the no camp was it would take Shell's reserve life from 8.9 to 8.1 in terms of years. So that's not insignificant.
Well, if we keep getting rallies, I saw one of the kind of general criteria was, we need to see crude prices lower and BP stock price lower. Well, today we're seeing the opposite. In the last 5 days, we've seen crude jump from 57. Last I looked, it was all the way back to 63. So, we'll see.
I mean, it could be just a function of if the right market conditions arise, it's all, it's being discussed at the executive level. Whether it happens is going to be a function of oil prices, stock price, et cetera. But I think it absolutely is a discussion point. And then you have to go to sort of management compensation itself. I mean, a guy like YL, what's his legacy? How does he get the big bonus? Man, this is one way to probably, in some ways distract. I mean, he's cutting. So I'm thinking he's probably going to hit his targets. But it's just one of those things that with a strong CEO like YL, does he sort of convince the board that this is a good decision? And it's going to take past his CEO tenure to see if it actually plays out, while he's getting paid and can retire saying, hey, I just did one of the biggest acquisitions in the history of the industry. You're welcome. So I think we have to put that in consideration as well.
One of the interesting points, BP became BP because of the acquisition with Amoco. I mean, if you really think about it, you go back to their legacy, and the whole driving force there was let's get bigger, and let's buy cheap natural gas assets. And, it made all the sense on paper, but what they totally missed in that acquisition is that Amoco had been starving its refining and its midstream assets for capital. Thus, you wound up with, plants blowing up and stuff that became kind of BP's legacy, unfortunately. And it was one of those deals that made sense on paper, but BP actually had an engineering committee that studied the deal and came back and said, we want all the natural gas. We don't want anything else within Amoco. And the BP CEO and board overruled that. So, caution there, YL, when you're looking at this.
Ready to move on?
Yeah. What's up next, Mark?
Well, I know you guys were probably paying attention to the trade negotiation news that was coming out of Europe. Not a lot of details, at least last time I looked earlier this morning, but we've got another of these 90-day hiatus periods, if you will. But basically, Besant and a Chinese delegation met in Geneva over the weekend, and the bits and pieces that have come out frame it as the reciprocal tariffs, which were 125% plus, go to 10%. Those are the baseline tariffs. Anything, an aside that I saw, anything under $800 in value defined as e-commerce is not included in that. So, hold the phone, Amazon shoppers.
Mm-hmm.
My question to you guys is, if we can declare at least a first round winner or loser, who ultimately caved, and who can credibly claim that they won?
Man, I mean, I'm still trying to really digest, the strategy here. I am in favor ultimately with going back to the rest of the world and saying, look, our trade deficit's so poor, we're giving such advantages. Now, I'd love government to stay out of sort of business per se, but in this case, I think by trying to negotiate and sort of right the ship, I'm in favor ultimately. I think it's a short-term pain. It could have long-term gain influences. I don't see anything wrong with that. The sort of the details of like this delegation, and particularly, I don't think we're really going to be able to know I care more about the long-term implications here. Short-term, I don't necessarily care. So who won? I don't know. I think I want to believe we're winning if this sort of rewrites the ship on our trade imbalances and how we're getting dinged. I mean, think about us selling into China. And for us, like that to me is part of the benefit here is, hey, you guys are basically getting a free deal here, and we're not getting that same deal going back at you. And so I'm like, to me, that's a win. I don't convince me otherwise.
So I've got three unrelated points here to bring up. Number one, for all our hysteria about tariffs, only 14% of GDP is imports. So if they go up 10% because of a tariff, that basically means on the rest of GDP, you've got a lower cost, call it 1.5%, just to stay flat in terms of pricing for America. So I think that's underappreciated. And I think you've got levers with taxes, deregulations that make a 1.5%, 2% drop on U.S. GDP possible. So that's one thing. So I don't understand why we're getting so hysterical about all this trade war going back and forth. That's number one. Number two, as we learn, because we're all energy guys and we've all dealt with oil field service guys, at the end of the day, you will ultimately price your assets at your variable break-even cost just to keep them working. If it is so bad out there that you're giving away a drilling rig just to keep paying your people and keep it running, you're totally going to do that. We've seen that in every business. So the key is not what are these tariffs going to do to prices? It's what is this going to do to the entities running those factories in China? Do we think they're making a profit or not making a profit? I suspect they're still making money. So you've got some power to push back there. And then the third thing that I think's totally been missing from this, what is one of the big defining aspects of Trump's life that is underappreciated? It's his older brother dying from basically being an alcoholic, being an addict. So I think the fentanyl push here is truly a real thing by Trump in terms of going after China, going after Canada for letting it in, Mexico for letting it in. And I get it. Look, you can hate Trump and all that. Go watch him on the Theo Vaughn podcast, asking Theo Vaughn what it's like to do drugs and how he became an addict and how he overcame that. That was real stuff. So that is something that a guy who knows he only has 3 years left and is worried about his legacy and is worried about truly people and addiction, that plays a bigger role here than I think we're giving credit for.
Good take, Josh.
So a couple of things. I'm just digging up a Kyle Bass tweet that I saw yesterday. in which he states that China came begging to the U.S. Apparently 1,800 businesses in Shenzhen and Beijing closed in a major area of China this week. So there is some knee jerking going on here if that's to be taken as fact. Which
how many are state owned, by the way?
I don't think anybody watches China or comments more on China than Kyle Bass from a political standpoint. I do think that structurally, though, and from a timeline standpoint, because of the inertia in key supply chain elements coming, inputs and finished products coming from China, and the need to get some of the angst out of consumers in the markets in the U.S. We've got to have this thing thaw out a little bit and look like a win. And I do think this weekend leading into the president heading for Saudi Arabia today to cover things like Saudi investment. It's part of a multi-country Middle East swing. It's his first international trip since taking office. But I think one of the things that hasn't been spoken, at least in the news that I've read, is, the way I think about why is he stopping in Saudi first? Well, he got 5-handle crude for a brief period, but it's up $6 in kind of 5 days. And of course, what's happened overnight really with the trade negotiations, continues to put more of a glass half full back into the market. So is there going to be a separate closed door meeting about maybe some arm twisting with the Saudis and OPEC to get his 5-handle crude? And, I want to point to lower gasoline and diesel prices to the electorate ahead of the 2026 midterms. So this, from our standpoint, has a very short-term objective of appearing to be more conciliatory, because we want prices on things to be lower, not higher, between now and November 2026. And people don't care about the details of drill baby drill, and that this windfall has come from the U.S. domestic producer ramping up.
Well, and at the end of the day, both parties have to look like they had a win or the deal doesn't get done. And so there will be a whole host of stuff for Trump haters to run around and say he caved and great. But at the end of the day, if both parties can't call it a win, it doesn't happen. So, with the fact we're talking about it and debating it, that's a good thing. That means a deal gets done. One last thing, and I'm going to kind of change the topic here because I like where you just went, Mark. Trump's a low oil guy, low oil price guy. He always has been. And here, I'm going to put both of y'all on the spot real quick. What I said at NAPE when I was on the panel is, I said, look, we know that. We know Trump wants lower oil prices. He's going to beat us up as an industry to drill more. He's going to bribe the Saudis somehow to pump more oil to get prices down. That's who he is. Are there 2 or 3 things that we as an industry could ask for that makes that an okay trade? Because I do think the flip side of Trump wanting low oil prices is, what do you need? You need this open, you need that open, you need permitting, whatever. What could we get out of him and this administration? Because at the end of the day, I think that's our opportunity. And I slowly think we're blowing it because all we're doing is sitting around on Twitter talking about how bad oil prices are.
Short of some sweeping legislation, primarily as it relates to emissions and permitting, speed of permitting, there's really no rollback that is going to put us back over the hump in terms of, okay, now all of this growth-directed activity resumes because we've had all this relief on the regulatory and permitting front. Keep in mind, the federal government, other than things like the EPA and OSHA, don't really have any say on non-BLM land. So, and there wasn't a high priority. If you go look at the proportion of drilling inventories that were making the drilling schedule, the vast majority of what's driven growth over the last 10, 15 years has not been on federal leases. So it's a bit of a red herring to say, we're limiting access to the detriment of what could be. It's just that they don't make the return cut in either geologic quality or all the other stuff that you got to do in certain BLM surface areas that you don't have to do on private or even state of Texas leases, for example. So there is little that can be done at the to offset the leverage of a $10 move in TI gives you either way. And so that is the overwhelming factor. I think that the way they look at it, the way the administration has looked at it from a political standpoint, I've said this before, is the constituents that are the U.S. domestic, mostly independent producer and OFS group are an acceptable casualty of getting $50 oil and sub $30 gasoline and being able to point to that as a win, because the part of the electorate that is among the individual consumer in industry that is gasoline, diesel, and other hydrocarbon and thermal commodities get a huge relief on their businesses from a margin standpoint. So there's we'll see who wins here, but you did call the U.S. peak last week, peak oil production.
That I did. Me and Travis Stice. All right, Kirk. So Mark's being doom and gloom. There's nothing we can get out of the administration. You got anything?
No, let's look at the previous administration as an example. If you just look at the Northeast, one of the biggest gas deposits in the country, and they can't even get it to the Northeast. They can't even export it overseas. What an administration can do is slow everything down and fuck it up. What I think most of us that are capitalists, and the government's there to protect us, so maybe there's some environmental regulations that we need to be stringent on, and we don't want things blowing up and near schools, et cetera. But ultimately, the Trump administration can just get the fuck out of the way and let businesses transact. That's really what administration needs to do, is make things easy to do business. And that's what encourages companies to move here. You think Shell would be a big win if they headquartered here? Think about all the tax dollars. It would be great. Make it easy to do business. So I think ultimately Trump needs to, the president doesn't need to be talking about, hey, I'm in the middle of this. We know Trump wants to think so, but make your administration make it easy for everyone else to do business, which includes working with the leases in the Gulf of Mexico, which includes working with the federal regulators to make it easy. That to me is what the goal should be, and it shouldn't be. This is not front page news. It shouldn't be. And anyone again, that's it.
We're both wrong. Let me interject. I want to rebut a little bit the doom and gloom characterization. Cynically, politically realistic, but I'm a glasses half full guy, because if Travis Stice and Chuck are right, you're now putting the only immediately available barrels back on the market in an accelerated fashion. At the end of that, if we get the whole trade friction cleaned up and the underlying global economy is okay, don't forget, we're at 104 million barrels a day. So 1 or 2 million barrels a day of spare capacity is a lot less at the margin than 3 to 5. And so get those 2.5 million barrels back online in the supply base. And if we can't grow and be the gap filler to demand growth that we have, that U.S. shale has been, we've got a pretty tight market. as always, watch inventories. And so that situation can change very quickly. We're dragging along below the low end of 5-year averages in crude and refined products. But, demand will tell you whether or not you have a tight market here, and it can do so, in 3, 6, 9 months, as Arjun articulated on CNBC just this past weekend.
So I think if we put a group together, and I'll nominate Case to be part of that group, grab some other folks, and walked into D.C. and demanded emergency regulatory relief and went step by step. The environmental studies needed to build an LNG facility. Come on, man, we've been building them. We get it. Let's waive those. Let's build LNG facilities all up and down the coast, starting in Texas, all the way to your Nantucket. Let's do that. If we started getting FERC waivers to build pipelines across things, let's exempt the energy from the Jones Act. I think there's enough, maybe even ask for royalty relief on federal lands, maybe a waiver for some period based on oil price. I think there's probably enough there that it wouldn't be the greatest trade in oil and gas's history, but we could at least get some of this stuff. We could build for a bigger future. And unfortunately, I've never run a big company, so I don't know exactly what all those levers are, because I was always, 5 guys in a rusty pickup truck, and that's the world I played in. It just feels like, could we get some relief on refining, et cetera? Is there enough there? Because we're just going to have to put up with $50 oil. I mean, that's just who Trump is. And the president of the United States has a lot of levers and can play those levers how they want to, at least in the short term. Long term, fundamentals matter. But
and I was speaking specifically to the domestic upstream, mostly the independents and OFS segments. There's really no, I don't think there's any scenario where that kind of ancillary relief is going to overcome the basics of the business. And keep in mind, they're all guided by and led by investor demands and incentives, which, I don't see kind of a rotation back into those sectors or stepping up to buy if I'm, as a company, saying, yeah, okay, we'll accept lower returns at $50 oil, which are inherently going to be the case. You can't do enough on the exogenous stuff in terms of cost and efficiency relief, efficiency in terms of time, to overcome that hit to the top line in pricing.
Yeah.
And by the way, the federal government saying we're gonna have a federal royalty holiday is not helpful to the deficit either.
No, I've always been a little Pollyanna-ish on this. Speaking of Case, why don't we jump real quick to Diamondback's earnings release and all things around that. Mark, you want to take that?
As they usually do, they led the way, and in conjunction with their updated capital and activity guidance, they said we're going to take down 3 rigs or reduce drilling activity by 3 rigs and lay down 1 frac spread and cut $400 million from the capital budget, which I believe at the midpoint was about 10%. That they were the largest and quickest, and it may be a function of where they stand on the earnings calendar. But they also had some commentary saying, look, this is, we're approaching a traffic light, and our foot's no longer on the accelerator. And what happens between here and kind of the rest of the year, if we see a red light, that's when we start tapping on the brakes. And so others have followed suit to a lesser degree. EOG, Matador, I think, was early talking about it. They cut less than, I think, 7.5% of their capital budget. What I didn't see in either EOG's or Matador's announcement was we're going to take growth capital to zero, right?
Yeah.
Operationally and contractually, this is a very hard thing to pull off, particularly when you've already you're already past first quarter. So there's just that natural momentum, and it's hard to affect that equilibrium or that pivot to get to, okay, we're going to go into maintenance mode. That looks great on paper. I get it. My sense was, just given what was going on and all the uncertainty out there and where this industry has been in the past, certainly last 5 years, being more aggressive right out of the gate in responding with 10+% cuts, lay down a third of your drilling fleet. That creates a kind of decline management issue. I get that as well. But I figured after, kind of continuing to drag along the lows of valuation and representation in the overall market, that there might be more of an immediate kind of messaging thing, because the producers in OFS have been happy with the early signs of what this administration is about from an energy policy standpoint, even led by one of their own, and Chris Wright.
Well, basically, the stock price was up 1% that day to $133. It's at $142 today. I think the market blew it off at a minimum, but maybe even more so respected it, appreciated the activity. Kirk, you got thoughts?
I mean, what's like? I was just thinking about some of the earnings announcements. What they're cutting back till a rebound. What's the rebound mark? I'm just curious. Like, what is the rebound point, and when is that going to happen?
If you take what Travis said, he said, "Look, 65 is kind of the threshold to start maybe reconsidering adding back."
Right.
But it's clearly, steady state, and there never has been a steady state, just given the compressed frequency of these things, and the amplitude of these up and downs has gotten more severe over the last 10 years, given all that we've been through. I also don't think the Saudis are willing to do this indefinitely. I think it's part of a political trade that said, yeah, we'll do this. It'll allow us to capture some market share again. I think the domestic producer and oilfield services group was an acceptable political casualty in this calculus. $50 oil really hurts the Russians too, as I've said before. And so, in this 4D chess game, to use a way overused term, and one that Kirk really hates, I do think that there's some uncertainty that has moved forward on the horizon, and that I don't think we're going to, until the trade issues resolved, demand's okay. Let's say we do move back into the 70s. I don't think it's any time over the course of 2025 where there's a rapid return to growth levels of activity.
I mean, what advice do you give your Gen Z children? Everyone's in debt. It's keep your head down, work hard, save money. And when the price is low, buy something because you're going to ride that price up. And that's a house or whatever. I think the market message is, of course, Trump wants low oil prices. He wants the U.S. economy to beat everyone. And with low oil prices, it squeezes the Russians, which plays right into our favor. Him going to Saudi squeezes the Chinese, because if they're on our side, that forces their hand. So what do you do as a U.S.-based independent? You put your head down, stop going into debt, pay your bills, and figure out how to be more efficient, because you are going to win in the long run. And that is something that, having been in this industry, we forget. Everyone's feast and famine. Like when $100, no one cares about anything. It's not about efficiency. It's about finding more oil. And then when you go to $30 oil, everyone's like, man, I can't do anything. Let's be efficient. So we can't rub two pennies together. I think this is just a great way to make those that have good fundamentals even stronger. And that's, it's back to flight to quality, as they say on Wall Street, but this is exactly what we're seeing. And it's good news.
And companies on balance are way more resilient this go around because the balance sheets are in much better shape than they were 5 years ago. And certainly 10 years ago. And there wasn't the, our kind of primary mindset is now very investor oriented as opposed to, as Bob Simpson used to say, growing for sport. Right. So I do think that there is much more resilience built in. I also have to believe, to be glass half full guy, I think the underlying fundamentals are significantly, if not very favorable. And if we are kind of, I don't want to say we're running out of growth opportunities in U.S. shale, I think there's certainly plenty of inventory still there. But you have seen a shift to companies talking more and more about conventional, right? That's inherently long cycles. And those come fraught with a whole set of what we used to call above ground risk, right? So I do think a harder to grow supply base, if indeed U.S. shale has lost some of its vitality, I think that's all, that's structurally positive. And
I think that
you're in good enough shape to weather it. You're right. Just do more to get more resilient going forward. They're going to be fine.
So I think the next step that needs to happen, so good step of, hey, prices are down, we're not going to drill, even to your point that it's not, the logical thing should have been, hey, we're not going to drill at all instead of baby stepping down. But okay, so good first step. I think the second step that needs to happen is the C-suite needs to be educating on these calls what stock buybacks mean in the way of economics. And literally that ought to be, hey, when we hit certain points, it's economic to buy, and talk about where our share price is at, where drilling is why. I think that's the other toggle. And when you have that, then literally you're giving investors everything you can do with each dollar you have. And it'll be interesting to see if we actually step into that. So, well, boys, this was fun. I'm glad we all got back together.
Yeah, man. Love to see.
Should do it more often.
D3 doing well. D3 doing well. Rhodes. Love that.
Thank you.
Love to see
I think we're playing in St. Louis this weekend.
Fantastic. At Rhodes or in St. Louis?
In St. Louis. It's whoever the regional host is. They had the selection show started around 11, so I had heard a little bit that it's probably St. Louis, but I don't know what the brackets or the times look like. So should be fun.
Awesome, man.
Cool, guys.